the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, Singapore shares dipped today despite Asian markets trading mostly in the green. So if you look at the Straits Times Index, it was down 0.22% at 4,223 points at about 2:31 p.m. Singapore time, and that is with a value turnover of some 891 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. As we shared with you earlier, the STI ended further in the red, down 0.28% at 4,220 points. Now in terms of value turnover, we are looking at 1.55 billion Sing dollars. Gainers outnumbered losers though, 276 versus 241. Top advances for today, we've got for you Shangri-La Hong Kong dollars, DBS and Avagar Limited. And top decliners we have here SGX, Keppel Core and Venture Core. Now, in terms of counters to watch, we have StarHub, because StarHub today announced that its wholly owned subsidiary, StarHub Online, has acquired the remaining 49.9% stake in MyRepublic's broadband business that it did not already own. Now, elsewhere, from how the US and China extended a tariff truce for another 90 days to how China has reportedly urged local firms to avoid using Nvidia's H20 processors, particularly for government-related purposes. We've got more international and corporate headlines in focus. Also on deck, a look at the latest rate decision by the Reserve Bank of Australia. Now, joining me on the line is Kelvin Wong, a senior analyst at Oanda. Kelvin, welcome to the show.
Hi, good to hear from you again, Tian Tian.
Kelvin, let's start with global markets this time around. I mean, the US and China extended a tariff truce for another 90 days, and the order basically prevents US tariff on Chinese goods from shooting up to 145%, while Chinese tariffs on US goods were set to hit 125%. Now, at least for now, it locks in place a 30% tariff on Chinese imports. Chinese duties on US imports will come in at 10%. How have US investors reacted to the news thus far? How much of that optimism had been priced in the days leading up to the announcement?
I believe that this report has more or less been priced into the US stock market and in some extent the Asia Pacific market. Given the fact that key officials that is negotiating this ongoing U.S.-China trade deal, like the U.S. Treasury Secretary and as well as the Commerce Secretary, has been painting a rather positive picture with this ongoing negotiation, and for them to actually tie up the loose end by giving the market this guidance that this potential extension of this trade truce may actually come into the forefront last 2 to 3 weeks ago. So that has really been priced into the market. I think what market is looking out for right now, will there be any new possible hiccups from the two sides, as both of them agreed to number one, China for China to actually kind of resume certain rare earth supply to the US, and US allowing certain we call it version of semiconductor chips and its relevant products to flow into the Chinese market.
We will definitely talk more about that in just a bit. But if we go back to the Singapore stock market as usual, Kelvin, for today, how did the STI fare, and any surprises if we look at the biggest movers?
If you look at the STI for today, it seems to be in a consolidation mode after last week's rally. So last week, it almost retested its fresh all-time high that was printed on 24th of July. So we start to see about three sessions of consolidation. And what's interesting over here is that, yes, today we see a minor dip on the STI at the close, which is down by negative 0.28% to a level of 4,220, but it still managed to help above this short-term rising 20-day moving average that is providing us intermediate support at around the 4,210 level. So I would say that overall the short to medium term uptrend on the STI still remains intact. And what positive news, components that is actually showing signs of still a bit of a risk-on behavior on the STI market is we start to see outperforming on those higher beta component stocks for today, at such as the banks. DBS is up by 0.4%, followed by UOB up by 0.3%, and Yangzijiang Shipholding, shipbuilding pyramid is up by 0.35%.
And let's zoom in on some of the companies to watch, Kelvin. I recall yesterday I was just sharing with our guests on the show, talking about capital cost divestment in M1's telco business to Simba Telecom. And today we've got news out of StarHub announcing that its wholly owned subsidiary StarHub Online has acquired the remaining 49.9% stake in MyRepublic's broadband business that it did not already own. I know you don't comment on individual firms, but generally speaking, what is the outlook for the local telco industry? I mean, yesterday we were just speaking to Chin from the Smart Investor. He was saying that regulators might have some comments on that. What are your thoughts?
Sure. Of course, if you look at right now, there'll be lesser competition in the local telecom communication, we call it industry. That means, i.e., there could be for consumers, potentially we may not be able to see such cheap pricing in terms of telco services like prepaid cards and even the internet broadband services as well, given that right now we are now facing lesser players in the industry. So, like I said, potentially there could be some signs of monopolistic behavior coming back into the market again. So, but however, in terms of performance-wise, the biggest player, which is I believe is still Singtel right now, may have an edge over here, at least in the medium term, given the fact that it's also considered as a defensive counter, where its dividend yield is rather stable, and that could also potentially see a bit of, we call it, share price outperformance, at least from a medium-term perspective.
And I'm just trying my luck over here. Could this mean that investors can now look towards the telco sector, because it seems that if it does go through, right, then the telco players might have more pricing power going forward?
Yes, precisely. So that also we got to take into consideration of the regulators.
Yeah.
Would there be them making any tantrums stating that consumer maybe starts to actually be at the losing end, given this current consolidation in the Singapore telecommunication industry? Okay.
And now if you're just tuning in, we're now in conversation with Kelvin Wong, Senior Analyst at Oanda. Across the region, Kelvin, I know we always like to talk about the Aussie dollar and the RBA when we speak on air. And this time around, Australia's central bank, the Reserve Bank of Australia, cut its main cash rate by a quarter point to a 2-year low of 3.6%. Now, it cited a slowdown in inflation and a looser labour market, although it was cautious on the prospect of further easing. Now, how far was this within your expectations? And also, given that the move was unanimous, how have the Australian dollar and Australian equities moved in response?
Okay, let's start with the Australia stock market. So, given the fact that right now RBA cut this time around, and also the press conference thereafter from RBA Bullock, which is the governor of RBA, she also kind of signaled there could be a potential couple more cuts after today's third interest rate cut for 2025. So that kind of add on additional liquidity towards the Australian economy, which is rather a positive sign for the Australian stock market. So if you look at the ASX 200 today, they are actually up again and hitting a fresh all-time high. Market leaders were related to consumer discretionary stocks. So that is also pretty much of a positive sign, given the fact that lower interest rate going forward will potentially, number one, kind of smooth out this ongoing economic slack that is being prevalent in the Australia economy, especially we talk about the last couple of data point from the labor market is not that fantastic. So this give a bit of, liquidity boost into the local stock market. On the other hand, we talk about the Aussie dollar. The Aussie dollar is one of, in fact, right now as we are speaking, is the weakest major currency against the greenback. They're actually down by negative 0.2%. but still holding on above a key support level, that is the Aussie versus the USD, at the 0.6480 level. So bear in mind that we know that when you talk about FX market, things got to be in relative perspective. That means we also need to look at the monetary policy stance of RBA, as well as the monetary policy stance of the U.S. Federal Reserve as well, which another important data print that was going to be out later, about three hours from now.
Yeah.
We have the U.S. CPI data that could also potentially impact the movement of the Aussie dollar, which is the Aussie versus the USD rate.
Okay. And further away, Calvin, you talked about this at the start of the conversation, how China has reportedly urged local firms to avoid using Nvidia's H20 processors, particularly for government-related purposes. Now, that complicates the chip makers' attempts to recoup billions in lost China revenue, and also the Trump administration's unprecedented push to turn those sales to China into a U.S. government windfall. Now, what does the latest move mean for sectors looking into the semicon sector? Should they take a wait-and-see approach, despite that earlier optimism after Washington, approval for them to sell those chips to China?
Yes, precisely. So we got to be pretty much mindful. This situation right now is a bit delicate right now, especially that 50% of the total China revenue, where Nvidia and AMD has kind of agreed upon with the U.S. government, because that is unprecedented. That is kind of indirectly related to the export tax. So will it be a precedent set for other semiconductor players in the U.S.? So if that being the case, potentially we're talking about net profit margin may start to actually be lesser for this U.S. Semiconductor corporation, given a percentage of them will be heading into the U.S. government coffers. But on top of this, we also got to be mindful that do not forget the current bullish trend in the U.S. semiconductor is bank on the optimism on AI-driven investment capital outlay by other U.S. corporations that are still spending heavily in this particular business segment, that is actually boosting the profit growth prospect for Nvidia, AMD, and as well as other various semiconductors. So I believe that these are the key factors that investors got to actually take note of as well.
I see. And finally, before we let you go, Calvin, as you mentioned, another few hours from now, we've got the U.S. Consumer Price Index due for July. Now, the reading could play a major part in the Fed's decision-making with regards to interest rate, particularly so given the Jackson Hole Symposium is just round the corner.
Yes.
What are you expecting on this front? I believe market expectations are for CPI to come in slightly above June's reading.
Yes, so what my expectation is within the consensus. So the consensus now is expecting a 1 basis point uptick in terms of the core inflation rate to inch up slightly higher to 3% from 2.9% year-on-year in June. So I believe that it is within this market expectation, the Fed is still expected to actually do its first interest rate cut for 2025 the next meeting in the September FOMC, where if you look at the CME Fed Watch 2 is pricing in a high chance of 80%. So unless we get a rather hot print like 3.10% to 3.2%, then that particular high print of 84% may dwindle downwards again, and market may now start to revise the expectation where they may only expect the Fed to come in the December meeting. So instead of potentially 2 interest rate cuts for this year, that expectation may be reduced to 1 interest rate cut. And when that particular scenario happens, we may see another bout of, at least in short term, that dollar strength to come back into the FX market again.
I see. Lots to watch indeed. Thanks so much for the insights, Calvin. That was Calvin Wong, Senior Analyst at Oanda. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.